Andy Cvengros, thanks for being here.
Sure.
Actually, you should thank me because I'm in Chicago. I'm really excited to be here. We were sitting right in the middle of downtown Chicago, and thanks for coming and talking with us at Data Center Hawk. We have a whole list of things to discuss, but I want to talk about the Chicago data center market because it's certainly interesting for the users that are on our side and people in the space that are continuing to try and figure out what's taking place in not just the U.S. data center market as a whole, but really the individual markets that make the U.S. what it is, Chicago for sure being one of those. You've, before we start, for the maybe one or two people that wouldn't know who you are and your background in the space from our group, tell everyone kind of what you do at JLL, your role in the space, and how you help companies today.
Yeah, for sure. So I came to JLL about 6 years ago. Formerly I was with HP and the Critical Facility Consulting Group, helping users kind of plan out their data center strategy. Got brought on by two other partners of mine, Matt Carlin and Sean Reynolds, and so we effectively lead up the Midwest practice. So we've really put a focus on helping users navigate their data center strategy. They own an asset, they're in a legacy building. Do we need to get out of it or continue to invest in it, or do we move to co-location? There's a lot going on with cloud and people just trying to figure out what their strategies look like. So we've taken this position where we help users go to market and negotiate their data center leases and help to save costs, help to optimize their footprint, go into different markets. We're out there tracking supply and demand, different metrics that each different types of users might find valuable for what they're trying to achieve. So as part of that, it's taken us down the path of doing sale leasebacks of data centers that are legacy owned assets that were built in 2014 and they never came to fruition, or moving out of an owned legacy data center into co-location, setting up disaster recovery, helping certain operators take down land or buildings to expand into new markets. So really covers the gamut in terms of the data center industry.
So coming from HP, EYP into the more traditional commercial real estate side of helping companies. Obviously you all are doing it from a technical approach, their IT infrastructure, but talk about how your time doing what you were doing prior to JLL has helped you serve the companies that you all work with, because it's a very different approach. There's a lot of I think professional consultants in the space that work with the traditional real estate companies that have come from the real estate side. You came from the technology side. Right. Talk about how that helps you and what you're doing.
Yeah, I think with data centers in comparison to traditional commercial real estate, office and industrial and you name it, there's so many parties that are involved within a company's side of things. You have IT, you have real estate, you have finance, you have risk, you have the C-suite. I mean, you name it, and all of them really have to work together to be able to achieve one of these transactions. And oftentimes we see IT guys just go and kind of do it themselves and not involve the broader scale of their company. And it tends to have hiccups, or they do things that they might not have, should have done. And so I think coming from HP, we were really selling strategy planning services. And what do we build? How big? How do we build it? What's right for us? And I think I brought from that a very IT consultative, consensus building skill set that traditionally real estate guys didn't speak that language. So how does infrastructure translate to real estate and rents and the supply and the demand of data center space? A lot of users just think it's a service and they don't understand that there's a metric there and a tracking of a market that they're trying to stay on top of.
And it's I think it's one of the most important things that people in your position do, which is help build consensus. And it's really challenging because you have multiple lines in a company that you're trying to align with one another to make a decision to move forward. And so there's high value for what you're doing and your team is doing as you're working with data center users. What's been one of the biggest changes you've seen from a data center user standpoint? You all do a lot of work with enterprise users, companies that have IT infrastructure requirements, and they're trying to evaluate it, and you've been doing this for a while. What's one of the biggest changes you've seen from their mindset and how they're looking at their infrastructure today?
I think by and large, in just the 6 years that I've been here, there's been a massive change in how these decisions are getting made.
Yep.
When I first started, it was the real estate director was kind of in charge of transactions, and
yes.
IT guys would come and say, I needed this, and real estate was operating the facility and managing the transaction, and really was in charge of getting that done. That has since kind of flowed in now to procurement and a CIO who's really kind of brokering services. Does it go to colo? Does it stay internal? Does it move to cloud? What type of cloud service? And really kind of segmenting those based on their individual application requirement. I'd say the biggest thing that we're seeing right now is that a lot of users know that they're going to the cloud. They don't necessarily know what's going to the cloud, how long it's going to take to get there, where their infrastructure sits in regards to getting there. And so they've to date kind of had a paralysis of really doing anything.
Yes.
And some of these groups that we're running up against are up against a capital improvement requirement, or their data centers just falling apart and they need to do something.
Yeah.
So I think the biggest thing is there's been an adoption of a strategy moving forward to implement.
Do you find that companies have a challenge of knowing what they truly have? I would think that before you all can really go execute on anything, and you've got to sit with the company, you've really got to evaluate. Okay, well, what are we working with here? Mm-hmm. I know when you were with HPUIP, you probably did maybe more of the technology side of that. But do you feel like companies still have a challenge with just really understanding what is our IT infrastructure footprint today? Mm-hmm. Can we get our arms around it?
Yeah, I mean, you see a lot of those older companies, the big kind of blue chip industrialized companies. Sometimes they don't know what's in their data center and they have to figure that out. So that's a massive transformation in itself. And a lot of them are using the cloud to achieve, moving those applications, upgrading those applications. Some are just not even in a position to do that. But by and large, we're just seeing people really trying to understand where they go from here. Do we continue to upgrade our infrastructure? Do we just throw it into the cloud? I think the scary part is the number of users, enterprise and financial and you name it, are saying we're moving everything to the cloud, and that they have or haven't shown any kind of financial proof point to work with, or why they're doing that, or why this application should go to certain areas, or otherwise. It's just this broad adoption of we're moving everything to the cloud.
Do you think that's because they hear about it in the market, they recognize that their company should be kind of hopefully on a leading edge of some of these type of technologies, and they want to make sure that they're a part of that? Do you think that's what's pushing it? Is it just the fact that they want to look good for the people they report up to? I mean, what pushes that movement to something that they might not be fully educated about? Or is it just impossible for companies to know what the cloud can do for them?
Yeah, I think it's a couple different things. You see a lot of CIOs come to the market and who are transformers. They're trying to be change agents within their companies, and they're coming in and saying, we're moving everything to the cloud. Capital One CIO came out and said publicly, we're moving everything to AWS, and that essentially flowed down through the rest of their stack, and so everybody's having to kind of get on board with that. I think from the other side of things, there's a digitization of standard business process. Trying to transform legacy businesses like insurance or banking or whatever it might be into this flexible online model that has scalable demand requirements and all that. So they're just trying to get faster at putting things into the business, and changing the business, and so it's a number of different factors.
You're probably one of the leaders in being an expert on Chicago, this market. You all do work in many other markets, but you're here in Chicago. So I want to spend a little bit of time talking about this market and some of the challenges with it, some of the reasons users like it. Some of the growth that we've seen over the last several years. I think there have been some really interesting things that have taken place here, specifically in the last 18, 24 months. First, why do companies find Chicago, an attractive market for their infrastructure requirements? Are they companies that are here in Chicago? Are they coming from outside the market, for an infrastructure deployment here? I mean, what do you see as it relates to that, and why companies really like being here?
Yeah, I think it really depends on who you are.
Okay.
If you're a traditional enterprise, you might be on the East Coast. There's you're in the middle of, the middle of the United States. Geographic risk is not necessarily an issue here. We don't have earthquakes. We don't have floods. tornadoes are pretty limited. It's a pretty safe place to do business. And so there's that one factor. I'd say the ecosystem, the number of companies that have a presence here, both from the West Coast and East Coast and North and South. I mean, everybody's here to a certain extent. Our workforce that's here is top notch.
Yeah.
We have a huge IT support system here, and that's why you're seeing a lot of West Coast companies move here.
Interesting.
The other aspect is reaching content, putting stuff at the edge. We have tons of great infrastructure with 350 Cermak. And most of the country's fiber comes right through 3 blocks from here, and it's just a matter of reaching a peering point, the sheer population of Chicago, and really deploying those assets to the edge is driving that as well.
And one of the trends we've seen, not just in Chicago but other markets, is growth in the downtown area, but larger deployments really pushing out towards more suburb related areas, and we've definitely seen that in Chicago. Why are companies doing that? I mean, what pushes them to want to go from downtown to areas that are more suburban in nature?
Yeah, I think the advent of the big wholesale campus data center is something that's really driven a lot of people to kind of go towards the suburbs. When you're down here, it's generally very difficult to build new product. It's a retrofit of a vertical structure, and so you've seen 350 Cermak and CoreSite and legacy data centers that traditionally have had a much higher PUE or less efficient. The raised floor, if any, are very short. So it's just a different type of asset. You go out to Franklin Park with Digital Trust, you see a very nice campus build with a fence around it. T5 just added a nice fence around it with security features around it. I think it just allows people to spread out a little bit more and see the economics of a large scale build.
Yeah, and I think it allows the data center operators to capture the economies of scale, build more efficiently. You made a good point about the security and the setbacks that those more land can provide versus being in kind of the downtown core. And I don't think that's obviously just Chicago. I think Dallas is another good example of that. How do you, so it's 2018, we're coming towards the end of 2018, and Chicago's been really interesting the last 3 or 4 years as it relates to the activity that's gone on here. I mean, it's very clear that there are companies with large infrastructure requirements that will come to Chicago because of certain components. How does that feel to you this year? And just from the people that are on our podcast and interviews, we talk about absorption, data center market absorption, how many megawatts traditionally have been leased, and I'm not looking for a number, but how do you feel like this year's been compared to others, in the past several years?
Yeah, I think we're definitely in kind of that second base of where things are at, in my opinion. And you've seen if you look at the trajectory of leasing, we've generally been a 20 to 25 megawatt market a year in terms of absorption.
From an absorption standpoint.
And that's been, call it 2015, 2016, going to that range. And so you see around 2016, a lot of the cloud companies really doing their deployment with Oracle and Microsoft and AWS nodes and Facebook and a lot of the new cloud demand that was going on. And really saw it peak and double our market size up to 55 megawatts. It has since kind of come back down to 25, 30 megawatts. So I think what we've seen is from an operator side of things, people say, what's wrong with Chicago? The demand's going away. Well, you just saw Microsoft build a 30 megawatt data center here, and they're good on their requirements for the time being. And so I think when you look at the sheer quantity of transactions, we're like 5x what we've ever been. And so there's so much more activity going on. To pair with that, where users used to be taking down a megawatt at a time, they're taking down 100, 300, 500 kW for shorter terms as they figure out their cloud strategy. So it's just a different market. It's maturing, and people are starting to get much more in tune with what their actual requirements are, rather than just taking a shot and building it.
Sure. One of the industries that's been successful here and growing in this market is the financial industry as it relates to data center IT infrastructure requirements. When you think about those type of companies, what's changed for them over the last several years and how they're deploying their IT infrastructure? Obviously these are companies that have traditionally have had high compliance requirements. They've been focused on latency as it relates to information getting from point A to point B. Are those still focal points for them, or have you seen that change?
Yeah, when you look at the financial industry here, it's really kind of driven the data center industry here with 350 Cermak. The Equinix 4th and 5th floor is where all the latency matching engines connect through, and then head out to the Cyrus 1 out in Aurora, or CME out in Aurora. I'd say, with the volatility decreasing in the marketplace, you've seen a consolidation of just traders in general. So a lot of the smaller trading firms have kind of gone away, and there's been a consolidation and growth of the ones who are here to stay. The guys who are, everybody talks about latency with these guys. Really, what we're seeing is a lot of those guys are pulling out the non-latency sensitive racks out of, the connectivity points that are charging $700-800 a kW, moving with standard wholesale.
That's not the market rate anymore?
No, it's not anymore. So, as there's been a consolidation in the industry, they're trying to save costs. And, you've seen a lot of those guys kind of just change their infrastructure layouts and also get into new things, high performance compute, and research, and algorithmic modeling, and just really trying to stay ahead of the curve. You saw Cyrus 1 buy the CME out in Aurora, and further expand on that. And so, we've certainly seen some activity around the financials out on that side of things. But then, the microwave transmission and all that stuff continues to push kind of here in Secaucus. Conversation. So it's super interesting.
So you mentioned kind of the development moving, to the west. How far west do you think it can go and still be, Chicago? I mean, what's kind of your thoughts around what makes sense and maybe what's too far?
Yeah, I think, a lot of it has to do with proximity to fiber, proximity to power, and just what's available at a given substation. I think you're going to continue to see further investment into Elk Grove, in Mount Prospect and Franklin Park, simply because of what they're doing with the substations. ComEd has made a choice to expand the Itasca substation and Tani substation by a couple transformers, which is adding a couple hundred megawatts to the region. They're going to build a third substation in that area for more cloud type deployments. So you're going to see continued investment there. You see Aurora is being acquired by Cyrus. A lot of people thought that was really far away. I mean, you drive around O'Hare, it's the same time as it takes you to drive to Aurora. So what we've seen is actually pretty good lease up in that region because companies are based down there. It's a huge concentration of enterprise. So people just generally like that. So it's not as scary as you might think. I think from just a land development perspective, Elk Grove is serving as the #2 industrial market in the country. Paired with the data center industry, which is also fighting for it.
I didn't know it was that.
What data center guys are competing with, who traditionally move pretty slow and doing due diligence and choosing a property and aligning capital with future builds, they can sit on stuff for a while. Whereas we have a whole slew of merchant industrial developers who will say, I'll buy a building, no due diligence, all cash and close in 30 days. So that's what we're up against. And we've seen a few industrials deals get done for astronomical numbers, and now every industrial owner thinks they can get that same amount.
Of course, so you bet. And that's actually an interesting point. I don't know if I've talked or we've talked enough about it through what we're doing, but how the growth of like the more traditional real estate markets, really the office or the industrial market, has impacted the challenges for the data center providers and developers as it relates to site availability. And Chicago, that's a good example of that. I didn't know Elk Grove was as popular of an industrial market, but you think about Silicon Valley and just it's not just the data center real estate, it's just real estate in general. Even in Dallas and the North, Dallas growth from companies moving out of California that have come to Texas. So that's an interesting, it's really, increased. It's not just the data center growth that's increased the land prices. It's obviously the growth from other, sort of the economy and the growth of other companies.
We're up 40-50% on land value just in 3 years. So that's industrial. You have Amazon who came in and took the top 5 largest industrial deals in in and around the areas. I think I'll add to that. You look at the villages. A lot of people don't understand how the villages kind of work.
Okay, talk about that. Yeah.
They have a lot of say in who goes where and who goes what, and planned urban development, and you name it. You see very established, tight industrial corridors packed right next to very established residential corridors, and so data centers aren't big job creators.
Sure.
We can't just stick them in the middle of a big concrete block in the middle of an area where they want to see retail and people thriving and that sort of thing. So we're kind of at a crosshairs of where we're going to go in terms of new markets, because there just isn't that much land out there.
So you sit with a lot of companies that are evaluating their infrastructure plans, and a lot of those companies previously had built or purchased and now own data center infrastructure themselves, and are making the transition out of that. What are some of the things they're thinking about, and what do they do with that facility? I mean, if they're looking at a facility where they've got 5 megawatts of infrastructure and they're only using 1, what do you do? What do they do?
It's a very difficult conversation to have.
Okay,
it's
why is that?
A lot of times they've spent a lot of time and hours and gotten approval for a big capital budget to go build a pretty new data center that's 2N. Very customized and meant for a single tenant. They never came anywhere near, close to using that. They've amortized that cost over a 20-year period, so they're sitting on a pretty massive, book value. Now they've decided they want to move everything to the cloud. They don't need their data center anymore, and they can't understand why nobody would want it, or it's not going to get what they thought it was going to be, because maybe they built to $20 to $30 million a megawatt, and you have the top providers building to 7 now. So it's
different equation.
There's a economic wise, it just doesn't make sense, and sometimes it's very difficult to sell.
So when companies find themselves in that spot, what do they do? I mean, what's the obviously I would imagine the first thing is just accept the fact that situation is what it is, right? You're not going to get the costs that you probably think you would, or what it's worth. Then what do they do from there?
There's a couple things we investigate from a standard sale leaseback. So monetizing your asset, you want to try to provide a revenue to it that's going to pique some investors' interest. There's a ton of capital influx into this industry right now of guys from GI Partners, Carter Validus, even other people who've never been associated with data centers before that are pressuring hundreds of millions of dollars to be deployed in investing leasable assets.
Sure.
We're going to look at the viability of marketing something like that on the open market. The problem is some of these assets sit in the middle of nowhere, and they traditionally want to be away from planes, trains, and automobiles, and they're not in Elk Grove. They're not in downtown. So we have to kind of look at something like that. It's much easier to sell a 100% leased data center than it is a empty data center or a partially leased data center. So we really try to find a balance of doing that, as well as educating them on what the valuation really is. And so we've done things as helping them to take marked write-downs over a period of time to help get their book value more in line with the sale price. And so it's could be a long couple-year process.
I think that's probably one of the most challenging things, is just getting everyone on board with the current market and what the market conditions are, because especially the people that made those decisions, which no offense to them, but at the time, I don't feel sorry for the data center user, but the guy that's got to make decisions on a 5 or 10 year basis, and then 2 years later the market changes, the company acquires another company, they outsource certain components. I mean, it's just a very hard position to be in. But I think that there's a lot of opportunity, at least from our perspective, and companies that have that own infrastructure, and they're just trying to figure out what to do and how to do it. Okay, so let's put data centers aside for a second. I mean, I know we could talk about this all day, but so one of the things I love doing is figuring out the people that I sit with, so I don't think I've ever, and I'm looking at this camera, I don't think I've ever sat with someone that has competed in one Ironman, let alone multiple ones. So what I want you to do, because there's probably people that don't even know what an Ironman is. First of all, explain what that is, and then I have some follow-up questions for you.
An Ironman's triathlon. That's 2.4 mile swim, 112, followed by 112 bike, and then a marathon.
And a marathon is how long?
26.2 miles.
Okay, so it's a swim 2.4, a bike 112, and a marathon run 26.2. Okay, Okay, and you've done how many of these?
I've done one full, a whole bunch of halves.
Okay.
I went to Indiana University and raced in Little 500, and so got really into cycling and road racing after that. So it's my background cycling, but kind of took it from there.
Now, are you a good swimmer?
No.
Okay.
No.
Because I feel like I would get into the water and just kind of, I'm just the worst swimmer. And the other thing about swimming I think is interesting is like I feel like you can be conditioned riding a bike, you can be conditioned running. You get in that pool, it's a whole different cardio workout.
Oh yeah. Yeah, it's a blast. It's more so the experience that you're going after. It's not going out there to race it. And, it's more so just kind of pushing yourself to the limit, and finding new things to chase and experience. And it's
where was the Ironman that you did?
I did the Madison, Wisconsin one.
Okay, so you did Madison. What? So you kind of talked about this, but what's something that you learned through the process of training for that? Because this is not like training. I mean, even just it's not training for a marathon. Yeah. It's not training for. I mean, it's training for all three. So your training times have to be crazy long.
Yeah.
So what did you learn through that process?
I think. So you look at my background. I never swam competitively. I never really I didn't have a coach teach me how to. Cycling kind of came more naturally to my background. Running was just everybody kind of they say when you turn 30 you run a marathon, and it's kind of like that thing you do. I think the biggest thing is there's no way to cheat with the Ironman. With the marathon you can kind of just slug it through and hope for the best, but with the Ironman there's no way to cheat. And you're just not going to finish.
Like 6 hours in, 7 hours in, you pay the price.
It's a 11-12 hour deal if you're competing, you're running. I'd say the biggest thing I learned was just trusting the process and having incremental growths. And the way you train for it is having 3 to 5% increases each week, and so that when you're there a year and a half later, you're fully well conditioned and prepped for it. There's no you get done and you can fully handle it. So your body, it's just absolutely amazing what your body can do if you take the right steps to get there. And so that was my biggest thing was, it was mind-blowing to me before I even started the process that human body could even do that. Let alone somebody who's not an endurance athlete. So I think taking the right process. You can achieve anything you want.
Did you have a meal that you said like, hey, when this thing finishes, I'm eating this? Or I guess you can kind of eat whatever you want. I mean, it is not, you can probably eat what you want when you're running, I would imagine.
It's very carb heavy, and so when you get done, so I grew up wrestling and, cutting weight and all that, so it was very like, what meal am I having when I'm done? This, when I got done, it's like I lost my appetite for 3 days. I wanted all I wanted was an ice cold beer and a nap, and that's about it. So
that's good, man.
That's good. It was a great time.
Well, what do you when you think about just the data center industry in general? You've been in it for a long time. What gets you most excited about the years moving forward?
Yeah, I think it's always changing. There's times that we're focused on heavy tenant work and helping users move out. There's other times that we're right now we're selling 5 data centers. So very big sale leaseback side of things. So I think with its trends and everything, how fast it's changing is just going to continue to keep morphing. And coming from my background, it's been a fun ride, and I look forward to what's coming. Ahead. It'll
be exciting to watch you and your team get after it. So thanks for taking the time to meet. This was awesome. Really appreciate it. And look forward to the next one.
Sounds great.